Welcome to the Deep Dive. This week, we're unpacking the latest crypto developments from our briefing. Lots happening. Markets, policy, innovation.
It's moving fast.
Yeah, exactly. So our mission, as always, is to cut through that noise, give you the key insights, and really explain why this stuff matters if you're following the crypto space.
Absolutely. And we're seeing some, really interesting connections now between traditional finance and digital assets. It's quite a moment.
Definitely. Okay, let's jump straight into a big one. Coinbase, added to the S&P 500. Their stock shot up, over 21%?
That's right, yeah. Big surge.
So for anyone less familiar, maybe explain why getting into an index like the S&P 500 is such a big deal.
Right. So think of the S&P 500 as basically the club for the biggest U.S. companies. Getting in means index funds, these huge funds that just copy the index half to buy Coinbase stock.
Automatic demand.
Exactly. Creates buying pressure.
Yeah.
But, beyond the price jump, it's really a nod to Coinbase's role. Since their IPO in, 2021?
Yeah, 2021.
They're seen more and more as, a core piece of the U.S. crypto infrastructure. It signals growing legitimacy for the whole sector, despite the volatility we've seen.
That feels like a significant step, doesn't it? Another marker of mainstream acceptance.
Yeah.
Okay, shifting gears a bit. Regulation. The SEC held a crypto roundtable. What came out of that?
Yeah, they did. The main focus was on how existing rules apply or maybe don't apply perfectly to blockchain assets. Chair Atkins pointed to key areas, issuance, how new tokens are created and offered, custody, so how digital assets are held securely, and of course, trading.
And the feeling was that the old rules might not fit.
Pretty much. The underlying theme was, this is new tech. We might need more tailored regulations, not just trying to shoehorn crypto into existing frameworks.
Interesting. And tied to that, there's been talk, President Trump mentioning a vision for the U.S. as a global crypto leader, maybe focusing more on clear rules instead of just enforcement.
Right. That's a potential shift in tone, isn't it? It kind of hints at maybe a more collaborative approach between the industry and regulators down the line. Could provide some needed clarity.
Clarity for innovation, which leads us nicely into tokenization that seems to be really gaining steam.
Oh, definitely. Look at VanEck. They just launched their tokenized U.S. Treasury fund with Securitize. That's a prime example.
And it's available across several blockchains, right? Ethereum, Solana.
Yep. Avalanche, BNB too. Yeah. And importantly, lower investment minimums. It opens things up.
So what's the core idea here? Taking a traditional asset like a treasury bond and putting it on the blockchain.
Essentially, yes. You represent ownership rights as digital tokens. The big benefits are things like near real-time access, potentially better liquidity, and making these assets available to more people. It really feels like the start of a bigger shift towards blockchain-native finance, especially for institutions.
Okay, so new products like tokenized treasuries emerging. We're also seeing consolidation, right? Robinhood buying WonderFi, Coinbase acquiring Deribit.
Yeah, M&A activity, that usually signals an industry maturing. Companies are looking to grow, maybe add new services, get into new markets, or navigate different regulatory environments. It's strategic.
Makes sense. We should probably also briefly mention the meme coin discussion involving the Trump-related token. Some ethical questions raised there.
Right. That event, it highlights the sort of unique and sometimes tricky intersections between digital assets, online communities, and public figures. It's a new landscape.
Definitely new territory.
Yeah.
So bringing it back to the regulatory outlook overall, it seems kind of mixed. We hear supportive noises from the White House, maybe some hurdles in Congress, but states are moving.
That's a good summary. I'd say there's cautious optimism in the industry. Federal progress can be, slow. But the state-level action is encouraging. It suggests a growing understanding, maybe hinting that clearer rules are coming, even if the path isn't exactly straight.
So if we tie this all together, the big picture seems to be crypto integrating more deeply into the mainstream. We see it with traditional finance embracing players like Coinbase and with these new blockchain-based financial products emerging.
Exactly. Regulation and institutional adoption. Those seem to be the key drivers pushing things forward right now.
Okay, so let's leave our listeners with a thought. As we see more traditional assets treasuries today, maybe stocks or real estate tomorrow become tokenized and live on blockchains.
Yeah.
What completely new financial tools or opportunities might that unlock for, regular individuals and for the big institutions? Something to think about.
It's a fascinating question. The possibilities could be quite profound.